It's the hopium, I guess, isn't it? That, does it eventually, like, we don't see as much volatility as each cycle matures? Is it a hope that eventually we won't see these crazy swings as much as we did? Or maybe the fact that I'm talking about that now is like a local top signal and we're going to nuke in like the next week or two or something. So I don't know. Sometimes I try to be a contrarian against myself, but it's quite hard to do that sometimes because you've got to just think everything you say is bullshit.
Oh, it's down. See, it's supposed to go back up. Like it's supposed to go down when it was like June. Was it June 12th? Like 1 week ago when the Iran, or when Iran was first struck. It was supposed to go down for a few days and then come back up, but yeah, it's just staying down. Not really recovering yet. Even though it's like, yeah, I mean, we can talk about it later. Put on the geopolitical caps and later on in the show. But
Yeah.
I mean, it seems like it's like chilling out now, right? Like there's like the reports about Iran like trying to get a deal done. But yeah, it's still the ETH. Oh wow, I didn't realize ETH was down that much. Solana, that's brutal. See BNB right there. Like that's why you always gotta watch BNB. It's like a good hedge, in to the downside as well. Like it never really goes down much more than BTC, and it'll marginally outperform as well. Doge, yeah, I think we put Doge as like on our short list in our weekend newsletter.
I saw that.
Where's OKB? I know the OKB, the OKX token is up a lot. I don't really know why though.
Well, they are working on some new payment products, I think.
Is that what it is? Like what, like stable coins or
Wow.
something?
Who can really say, if that's what it is? But I've been hearing chatters.
Okay,
Chatters.
hearing things. I'm hearing
Hearing
things.
things.
Okay.
Hearing things.
We've been over 100K for like, what, 2 months now? Maybe it was is even April, May, June. I don't know. If you look back far enough, like even though like you see how depressed people get from like basically like a 5% range, but the first time we hit 100K, we didn't spend anywhere near as much time above it as we have now. So obviously there
Well,
must be more people buying than selling, or we'd be so low by now. So something must be happening.
on a month, yeah, like on a month to month basis, yeah, I guess, yeah, you're right. But like that's for BTC, yeah, it's a 5% range for BTC, and it's like a 70% range for alts. Um, so I mean, they still, yeah, most alts still have not. It's like hype and BTC that have hit new all time highs, past the like January 20th peak, and everything else like kind of sat on the bench. Um, while yeah, Bitcoin and hype are like the studs on the team.
Yeah. We only get alt season once all the people who called for alt season become Bitcoin maxis. Once they all become a Bitcoin maxi, then we get alt season. Once they've renounced and become, religious in their ways towards Bitcoin, then once they're all gone, dead in the water, at that point alt season comes because it can't be too easy. If it's too easy, anyone, the guy from your local coffee shop would be buying altcoins and making money, right? So, I've always been a believer in something like that, is that if it's so obvious and easy, like it's probably not always the right time for it. Like after the Trump tariff announcement and we went to 74K, whatever, the amount of people a few months before that who would have been like swear down that they'd be buying a dip. Oh, I just need Bitcoin to dip under and I'll be a buyer straight away. And then when the time comes, nobody wants to fucking buy. So it's like it's human psychology and markets. It's
Classic.
something where people will always find a way to either change their price targets higher when they need to sell or change their price targets lower when they're looking for an entry.
Exactly.
And
That's just the
yeah,
way
at the same
it
time,
is.
though, we have a very different alt season outlook for now because we basically have two data points to look from the two past cycles, which are the 2017 ICO boom, which was basically the birth of altcoins. I don't really see that cycle being a good data point. And secondly, the post Corona capital
Yeah,
injection that
that was a real
had basically
health cycle.
exactly, which had the birth of a lot of these big altcoins that survived that have significant market cap today, such as Solana, which came out of dust, basically, a couple cents, right? So from now on, I think we'll see probably in a couple of years what will look like an out season. And for now, we haven't seen it. Bitcoin actually just hit a new dominance high, I think yesterday at 64%. Um, I mean, this year's high, right? Or this
Okay.
cycle's high, not historically, but uh, I'm not sure that the altcoin cycle is going to come with a dominance drop. Michael Saylor says dominance is going to go to 95%. I don't think it's going to go that high. It could go higher with altcoins rally. That's like one of the psychological barriers that I think the market has. It's like charting Bitcoin. I mean, ETH BTC, you get you name it, Sol BTC, whatever coin denominated BTC is very hard to beat. And BTC has these tailwinds now, which didn't have in prior cycles, such as the ETFs, all these new sovereign nations getting on board. So I'm kind of a contrarian at looking basically on Bitcoin dominance to judge and gauge market interest in altcoins, though. I would
Yeah,
probably
yeah.
exclude Bitcoin from the calculation and just look at
For sure.
total without, stables in Bitcoin, and that should
Yeah,
Yeah.
for
give you a
sure.
much
Like
better.
2021 was crazy. Like that was when you had like relatives and stuff that don't even care about crypto, or like 50-year-old dudes that you work with, like buying actual alts, like not just buying Bitcoin, like buying
Yeah.
actual alts.
Yeah,
That has
yeah.
never happened since then. Like after 2021, that has never happened since then. Um, yeah, I don't know. It might not ever happen. Like that's just too. That's too much. Like random people that you work with at like a bank or whatever should not be buying metaverse tokens. Like that's
Anomaly,
crazy.
anomaly. I mean, people were also very bored at the time, just the pandemic, you were looking for anything to just do. Um, and talking about BTC tailwinds, you didn't even mention all the treasury companies popping up, not just for BTC, by the way, but we're gonna get into that. I want to kick it off proper first. So yeah, everyone who's tuning in, welcome to Market Cap. This is where we discuss, usually with funds, founders, and our analysts, the current movements in the markets and try to make sense of them. Um, I'm your host and moderator, Stefano, Director Institutional Services at Alea Research. With me, I have Daniel, our Research BD lead. Darren, our analyst focused on a market cap show. And for the first time today, we got Mariano with us, who is focused on our valuation and monitor style reports primarily. But Mariano, maybe you should enlighten us a little bit about what it is that you focus on.
Awesome. So basically, my work at Alea has been around delivering a new type of report, which we call benchmarks, which is what Stefano gave a very brief introduction to. We just released our first one, which is free under our basic plan. It covers protocols on a timely basis, either monthly from the bottom end to quarterly, which is the usual, to semi-annual or annual. That will give you key insights from data of the protocol, such as key performing indicators, which define the protocol's growth, all the way to the qualitative and
Nice.
enhancements that the protocol had during that period, such as upgrades from the software to the roadmap that's going to trigger significant onboarding or KPI increase. So that's all going to be covered in these reports, which are timestamped on the certain date, meaning end of month, end of quarter, end of semester. And it gives the investors, the team, everyone that's involved, the community, everyone that's involved with that product and protocol, an insight into how the protocol is developing, both in the data end and on the development itself, of the software, the community. So this gives investors, as I said, it gives us a transparency feature, which the gap, I think the market has a clear gap from protocols that have phenomena, you know, there's phenomena data. You can really see the data in default. Well, how do you interpret it? How do you
Exactly.
take actions? We have led certain initiatives on these types of reports, which we haven't seen elsewhere. Where myself as an investor and others, which are very curious on, which are, for example, correlations. How do you interpret a, let's say, trading volume data from Hyperliquid or its peers from the sector? You need to draw a correlation line between those. So that's a feature we do have on those reports as well. If there is a high correlation between trading volume and the market has been drawing down the price, its price, and the trading volume has been maintaining, voila, you've got a value driven decision if you want to scoop some more. So that's an example right there of how you could turn this timely based report into an actionable insight.
That's
Right,
very
right. And
interesting.
then
And then yeah,
yesterday
I'll
we
just
had
skip a little bit. Yeah, I'll
no,
just
no, continue.
yeah, go ahead, Daniel. Sorry.
Yeah, yeah. Just real quick. Yesterday,
Yeah,
Blockworks
okay.
announced their the token transparency framework, which is obviously
Yeah.
a little different than the benchmarks, but it's like kind of in the same vein. Yeah, especially for like liquid investors and yeah institutions that can be deploying like size into these positions, like having insight into like the actual maybe like the actual like legal structure around the project, and then like more of the stuff in our benchmarks. Yeah, protocol performance on a monthly, quarterly, like semi-annually, whatever it may be, basis. So yeah, both these things provide like a lot more transparency, which is needed if you want to have an environment where tokens are, like bought and sold more like traditional markets. And yeah, you need the proper tools to conduct like that same kind of high standard of due diligence that you would see outside of crypto.
100%. Also, want to touch on the other report that you've been working on, the Market Pulse, which I call it a market monitor, but basically it's a weekly review of what's going on in the markets. Um, I can show a quick example. I think we covered, right. We cover many things, but maybe you can tell us a little bit more about the general idea of the pulse and how it came to be.
Awesome. So Daniel has been working on the pulse before I have, so I think it would be better for Daniel to start off, and then I'll add some
Sure.
new implementation that we did
That's a
later.
nice dynamic.
Yeah. I mean, we've been doing what you would call polls. I think we were calling it something a little bit different before, just like a kind of like a weekly roundup type thing. But yeah, we definitely put more emphasis on this product in recent weeks to really try and like dig into the data, and yeah, not just like kind of aggregate news from the week, but yeah, really like provide insights, provide um, more data driven insights, I would say, than like headline, more like narrative driven stuff. So yeah, each week, this is for our premium members only actually, but yeah, if you tune into the show, you'll see a few. We'll leak a little bit of the alpha, but
Few
not everything.
nuggets.
Yeah, yeah, just a few nuggets. Um, yeah, so we covered syrup a little bit. I mean, we've released more in-depth coverage on syrup before, and yeah, I mean, fundamentals continue to improve. Like protocol performance
Yeah.
continues to improve. You can see here, yeah, TVL, the price, yeah, just going up. I mean, it's like exactly what you would want to see. Their migration window closed, the MPL, the old token to the new token closed last month, and then there was like I want to say like at least 10% of the supply that was unclaimed, and then yeah, that basically went into their like the project's own strategic fund basically to be used later. And yeah, I mean, Maple's been one of the projects on the come up, not just covered by us, covered like industry wide. Yeah, you had Cantor Fitzgerald using Maple as well as Falcon X to kind of like test out their Bitcoin collateralized lending facility. You even had like one of the co-founders of Maple, Sid. I think he was speaking at some SEC event where, like, they're trying to like get industry leaders to get their thoughts and maybe help draft influence legislation, right? Like, you want to hear from the top minds. So it's like kind of growing their footprint in this area, which is like becoming increasingly important, right? You have ETFs and like treasury vehicles and all this stuff. So I think it's becoming more important to have like that TradFi footprint as well, not just like an Aave or something where it's like very dominant on chain. It's like, okay, what are you doing off chain though? And for Maple especially, it's very important, right? Institutional lending. So even if you're sourcing liquidity on chain, it's like half the business it's not on chain. So yeah.
Yeah, Maple's been putting on a strong performance. Interesting comeback together with Euler.
Yeah, very interesting comeback. They finally broke 2 billion in TVL. Yeah, I think they were like on track to hit it in, should be like very early 2022 maybe, and then things happen. So it took a few years, but now they finally broke that 2B milestone. Yeah,
Yeah,
Euler too, as you mentioned. Yeah, another big one.
yeah. Also broke a billion. Maple crossed 1 million in monthly revenue. Huge milestone as well. So not only TVL but actually revenue generating, which
Yeah,
is I don't know. What do you guys think? Is it a sign of market maturation
and is that
or
revenue,
industry?
like that's not fees, right? I think that's like actual like net revenue. But yeah, it is a good sign. Like, I think, yeah, it wasn't that long ago where their annualized revenue was like below 10M. So yeah, it's definitely good to see. And yeah, as you mentioned, like, you can't just take TVL at face value, right? Like, a lot of the, especially like for lending markets, like the TVL is kind of it's it's double counted. So yeah, you gotta. I think it definitely, like, in 2025, mid 2025, you got to look under the hood, take a look at protocol performance, like actual revenue, like how much of the TVL is actually, are you actually able to extract a fee from, and then yeah, put have that going towards your revenue. So I think Maple is definitely like a strong contender for like these actually profitable DeFi projects, and yeah, it's become one of these. It's like 500M market cap now, right? So it's hard to deny. It's like it's getting up there. So
And the reason I wanted to talk about this in sort of conjunction with the benchmark that we were showing is that it seems to me, but I'm not sure. It is my question to you guys, if this also might signal a shift in the way that we evaluate crypto projects, where traditionally you could only really go off speculation, like how high can it go, like the sky's the limit. But now if you have actual revenue, this really changes the way that you look at crypto projects as investments, or
right.
does it?
One last thing I'll add is that, yeah, like even with the revenues, there is, yeah, like the just it being a token, not like it
Hmm.
doesn't have the same like legal, doesn't have the same like legal rights. So this doesn't even apply to like project tokens. Like, it applies to like stable coins and stuff too. Like, if someone just steals all your stable coins, like, what are you gonna do? So like, yeah, it's not the same as like traditional markets where it's just purely like revenue based. You can look at a multiple, something like that. Like,
Okay.
there's kind of like a, yeah, it's not the same as a stock in that capacity, but it's
It's
getting like,
not
it's
that
bridging the
easy.
gap. It's bridging the gap.
We're
Like,
not there
maybe in the
yet.
future, yeah, not there yet. Maybe in the future you can have something where it's like natively, yeah, like stock natively issued on chain, right? So you're seeing more stuff about that. Like Solana posted something about, I forgot what it was. Posted something about that. What was it? Super State. They're trying to do that, like natively issue stock on chain. So the token actually is like a stock, right? You have the same legal rights. So yeah, that's like, I guess that would be like the main barrier still. But yeah, it's good to see
I'm
like
assuming that
the
requires
merging.
more progress on the regulatory front.
I would assume so as well.
Yeah, yeah.
Yeah.
Okay.
Revenue's a
Um,
weird one because I remember, like, during the bear market of the previous cycle coming into this cycle, I think it was when GMX when GMX first came into the spotlight, everyone was talking, real yield, real yield, real yield. And I'm there thinking, well, so everything was fake yield before, but it was the move away from,
kind of.
it
Yeah, a
was,
little bit.
farm tokens, pool two, whatever you want to call it. And like, there's definitely aspects of it now where, you can look at a protocol and you can see, yeah, they're making money. Sure, we can apply all of these TradFi metrics to them and say, yeah, that's a good company. You need to put your money in if you want to make money. But I think the one thing which I think is another reason why things like revenue won't always dominate in crypto is because Bitcoin itself, right? Most can agree Bitcoin's like the bedrock of our industry. And you could argue it doesn't necessarily have tons of fundamentals, revenue. There's no CEO, there's none of this. So, like, I think in some cases, revenue for a lot of these projects, it is a valid thing. But at the same time, when you see the absolute dog shit that's pumped to ridiculously high levels, none of that had revenue. People weren't buying them because, oh, the revenue of this token is so good. I think it's much more of like the Trojan horse that crypto needs to try and get TradFi to be like the exit liquidity for some of these bags. But that's just my own like nuanced, take.
You brought up GMX, so that actually something else to think about is like GMX, like it already has GLP, like so for talking about revenue, right? Or even like Jupiter with JLP, like it has these mechanisms to share revenue, with people outside of the token. So yeah, that's another thing because like the end goal of revenue is people are asking like, okay, but like how does it get, like how do I get the revenue, like how do I get the dividend? That's kind of like what the end goal is. Like that's why people care about revenue in crypto, which is not always the case like in traditional markets. Like they're not, yeah, like some of the largest companies in the world are not, like no one cares if that revenue comes back to them. So yeah, for projects, that's one thing to think about is like if you have like a GLP, something like that, like you're already putting out a fee. Like you can access that revenue without buying the tokens. So it's like how much do we got to give you guys? Like, you know what I mean? Like we're doing all the work. Like how much, like, and now we gotta have a buyback. We gotta buy back and burn. We gotta have a staking for stable coins thing. Like how much revenue do we got to give you guys, man? But I think right now
too damn high.
Hold up. I think revenue is also to some extent, maybe not 100%, also a sign that this is actual valid. This is something that is contributing value for people because they're willing to, pay you for it in some way. So it sort of validates.
yeah. Well, it's like for the question is which people is it creating value for? So if you're buying the token, like you want that people to be you. You don't want it to be the team, right? Like pump funds, like 20 dudes taking the value, which is great. But yeah, like just revenue alone
even there,
is validating.
but hold up. Like even there, you could argue that validates Pump.Fun as a business.
Yeah.
Like there, like we can hate on Pump.Fun
it does
we want, like for obvious reasons. There are like many problems around it, maybe, but they're providing something that people want.
They do, but in crypto, more people have like they see revenue and then they like it because they're like dreaming about how
like,
they can get it.
I can get a piece of that. That's true.
Yeah, like some of that I think needs to go. Like it shouldn't be an expectation. Like you have something like hyper liquid setting like it's almost like killing some of these projects. It's like how can you compete when you have a token like that? Like it has an airdrop, the chart is up only, and they have like the super high buyback ratio. If you're like a competitor project, like how can you compete with that? People are always going to be complaining about your tokenomics. Like you're always going to be stacked up to something like Hyperliquid, which is like kind of like a unobtainable standard. So yeah, I think sometimes people need to like drop the like a little bit of like a slice needs to be drawn between like revenue and how you can get it. And you're like, okay, yeah, revenue, yeah, it's like you're getting money, like you're validated because of that, right? Even if users don't get it, like it's why Pump Fund is able to raise a bunch of money. Even if I forget what the latest report on like what their like buyback scheme will be. I swear it was like 25% or something, but like it wasn't like a crazy amount, right? So, but people are still willing to like ape into this ICO, it'll probably sell out. Yeah, just because that revenue it really is validating the idea of the project. So yeah,
Mhm.
so I think I'd like to see more of that basically. Like, yeah, valuing projects even if the revenue, like the token value accrual is unclear, but just valuing revenue in isolation.
Mariano, what do you think about this?
I
The
come from a
notion because
school of value investing. Yeah,
right, I thought you'd have an
go
opinion
ahead.
about this.
Yeah, yeah. So I come from a school like I've studied economics and did corporate finance as well. But I come from a mindset that revenues and value, intrinsic value that comes from top line or bottom line revenue are like gravity. Essentially, it's gonna pull you down. The higher you go, the higher you could fall off from. So if you do an analogy, like the worst kind of analogy that TradFi hasn't bought into Bitcoin for so long has been because of this, right? They haven't seen any revenue coming from Bitcoin, at least on a relative basis that would look attractive on a multiple. Therefore, they haven't actually accumulated what they should have prior.
Right,
Now
right.
they're
It's
buying
unproductive.
on over $2 trillion. They're buying now over a $2 trillion market cap coin, which is beyond laughable. That's why kind of a lot of asset managers are even avoiding talking about Bitcoin on a public basis right now, but they are talking in a private family offices and whatnot. So excluding Bitcoin, which I think is a special snowflake, which a lot of people are using now, this term. I think all other crypto assets fall either in a couple of buckets, but the two major ones are going to be revenue generating, which have the gravity effect. So if you have any kind of intention or foreseeable future revenue sharing mechanism, or your token holders or community are holding because of that, I think gravity plays into this price of this token. So you're gonna have to either address that cause and be knowledgeable, and that's kind of the camp where benchmarks fits, where we're gonna have a lot of tokens that have structured financials where you could do essentially like a top to bottom line revenue and how that relates to token price, how that has played out with these key performing indicators over time, etc., and laying those out clearly over time. And the other bucket should be the meme coins, which have no relative value. They have no essentially no revenue if you think about it. You could call it revenue like some other um, variables that they end up generating, but it's not like a business as we know. So one would be very akin to traditional finance, where we can do a lot of the fundamental analysis, which is what we are doing here at Alia on most of the tokens we're covering. We're doing, we're justifying a lot of the future upside that a token may have because of these catalysts. XYZ, right? For let's point out an example. Hyperliquid,
Yep.
it's a great example because it at least wasn't an L1 to begin with, because most tokens that rally up to the top 10 are an L1 or a meme coin, or so it's an I'm not quite sure if top 10 yet, but should be higher than a couple of those top 10s in my honest opinion. Like I give it Cardano, ADA, whatever. Those coins that are highly valued, which are coins, by the way, that we are quote unquote shorting on the market pulses uh,
Just putting it out
portfolio,
there.
which is bid ask. Yeah, but a quick offer leak. But yeah, so bottom line is that Hyperliquid was a great example, and it's being covered now everywhere in the news. There's even big asset managers now mentioning it, and it's a basically an outlier that has a real big revenue stream that has
Mhm.
climbed to a significant valuation within the crypto ecosystem, which I think is um, it has, like, for so long the industry has been claiming that the fundamentals are coming. We're going to be valued in fundamentals. There is a cohort of CT which thinks that's bad, which thinks that most tokens heavily overvalued if we go to that outcome. But we are on the other side of that, where I think there's a gap of information, which is where we get into the most recent um, topic around the lemon market, pioneered by this concept was pioneered by Felipe Montenegro, which is a key analyst from Alea Research, which is a liquid fund and a VC as well, I think. He basically explains an analogy with car markets, that essentially when you're buying a used car, the seller or the company that's selling you this car, let's say it's a company, they know if it's a good car or a bad car, but they sell it at the average price, because there's always going to be someone who buys either of those. Instead of selling the good car for its price and selling the bad car for its deserved undervalued price, they just average out and make more sales. So essentially, it's this weird spot where we are in the crypto markets, where there's a lot of bad cars, and those bad cars are weighing down the average prices of the good cars. So we've mentioned Syrup, which is Maple Finance's token. That's being weighed down and has been repriced in the previous weeks and months by those bad cars, bad tokens, such as meme coins, as an example. That's or other smaller tokens which have drawn a lot of liquidity. So yeah, that's I think a good example of how, there's this information gap of if you give or take, retail doesn't know much about of crypto. There is an information gap where these benchmarks, they have a lot of advantages over TradFi companies. We could close them before a quarterly basis. Every public company in the U.S. has a quarterly earnings call, which basically gives this information where crypto we have on a block basis, which depending on the blockchain could be sub-seconds. So therefore, we could be generating these reports and having these insights on a much faster pace. And then
Right.
the bottom line is that I think, revenue. We all agree that revenue is a good thing, and then I'm against those CT guys that think that this is not the way to go.
Yeah, you're right. The cadence can be much higher than quarterly as well, which is one of the advantages of like having this stuff on chain. But yeah, I think you mentioned the public markets, but I mean, actually like even the public market, like U.S. public markets, it's like there's you can still look at examples. Like there's always room for narratives as well. So like in crypto, like it was only narrative driven for so long because you had like all the biggest assets were just chains. Like they have no revenues. There's no, yeah, it's not like a traditional project, right? It's very like where did the fees go? You can't even but now that we have like actual DeFi projects, they have like hype kind of breaking into that like sub top 10 category. It starts to change mindsets. But even in the public markets, like you have Circle right now. Circle is trading at like 155x. Their net income was like
even higher
150
now.
for the
They
M. Yeah, now
rallied
it's higher
yesterday.
because it was like $100 when we covered it. Now it's like over 200. So we're talking about like, yeah, this is like over a 300x multiple probably around there for a publicly traded, like, yeah, this is a stock. This is not like some crazy like, oh, it's like a meme coin or something. Like this is a publicly traded company, and yeah, it's able to bank on this narrative, which yeah, it seems like TradFi doesn't really like. I guess the crypto native institutions, yeah, they really do like the revenue. It's much more sustainable. But yeah, TradFi is really like all about the stable coins right now. I guess Circle, yeah, Circle's like a conduit for that. But even like outside of Circle, there's examples like Tesla. Like remember when Tesla was should be like 2021 around there, and like they were only profitable because they were selling EV credits. Like they weren't even selling cars; they were selling the credits that the government gave them. Because each company had like a quota, they had to produce X amount of electric cars. So like they were just selling their like made up credits to other. And then yeah, I mean even today it trades at like a crazy multiple, and because like the humanoid robotics, like it's trading for reasons that are not even um, indicative of like what the company even does today, like beyond just the revenue numbers, but just like the fundamentals. Like it's trading like a non-car company. So yeah, there definitely is room like in stocks and crypto as well for like the narrative driven stuff to shine through, especially when you have like these periods where you have like inherent inflows, like the money's going to go somewhere. Um, so yeah, but I think that definitely going from like a purely narrative driven, like you look in the top 50, every single one's like a chain or a meme coin or something, to something where like, yeah, the top 50 has like, 20 DeFi projects in there. And yeah, you can have things like benchmarks for them, regularly tracking their performance, potentially, yeah, impacting like these sentiment around these tokens. So I think that's a much more healthier dynamic. And then of course you're going to have these things, yeah, like a BTC, ETH, Sol, that are kind of like special in their own way. But
Mm-hmm.
yeah, I mean, really, you shouldn't have like things like ADA, like these random chains that no one uses, like being valued very highly purely because they are a chain and not an application. Yeah, I think that will definitely start to fade.
Okay, you mentioned these blue chips, right? BTC, Sol, ETH, but also in the same vein, something like Hype is breaking like the top 10 with
Yeah,
actual, you know, generating
I
revenue.
think we'll
And it
call it a major
seems
now.
like,
Yeah,
well, you could, yeah, yeah. I mean, that wouldn't be weird at all, I think. And it seems like switching gears a bit, right? It seems like these all these treasury companies or reserve companies that are cropping up are catching on to sort of like this same idea because it keeps continuing the amount of treasury companies that pop up, and they basically buy up like these assets that you just named in the same vein. It's all BTC, obviously, like Metaplanet, but also Soul. You got something like Soul Strategies, DeFi
mm,
Development. I'm looking at the chart that unfortunately I can't share, but Mariano put together. Maybe we'll share it on a subsequent episode. But also Hype, ETH is in there, of course. SharpLink,
right.
but Hype by something like Tony G, Co-Investment Holdings.
Wait, it was called Tony. What? Tony G? What?
Tony G.
And there's
Okay.
another company, a
Yeah.
biotech firm as well.
Like
But
a quick like side quest is like the actual model for these treasury companies is it's like it's bad. Like I mean, you're basically taking like a shitty
okay, talk
business
about that.
and
Yeah.
like I just heard that name, it just made me mad. Like Tony G. What? Like this is
I still
crazy.
think it's the same
Um,
as the zombie companies.
yeah,
We
exactly.
Yeah,
We
spoke
touched
about
on
it
this
them
must
before, like
years
be.
these
ago.
zombie companies.
Yeah.
Yeah, and like it worked. I feel like strategy is setting like a bad example because Michael Saylor is actually like a pretty competent, like he's a very smart guy.
Hmm.
But like, I mean, his
But
company didn't go anywhere for decades. So it's like
with the current
Metaplanet as
company or
well.
his previous companies, you mean?
Strategy, micro strategy, like it was doing nothing for like 2 decades. Like he had
Yeah.
a scandal of like he fat fingered some accounting reports. I forget what it was.
It was
Like
accounting fraud, I think.
yeah. And then they just didn't go anywhere for it. And like today, their actual software business is like irrelevant. It's like only about Bitcoin. Metaplanet, same thing. Like we're talking about a hotel company that was down to their last hotel. Like they closed every single hotel except one, and then
Correct.
now they're like, yeah, I guess they're the second biggest treasury company in the world now, right? So it's like, do you
Yeah,
want like, yeah,
8,888 Bitcoin.
like, do you
Yeah.
want that kind of operational? Like, seems like a pretty subpar operational track record. Like, do you want that guy like running this thing? So I know the treasury companies like they're being incentivized with like the amount of tokens per share of other companies. So it's like, are they bringing in like are they working some trading desks, some market makers? Like, are they onboarding new people to actually run this? Or like, I feel like if they're just leaving the same, like you don't want the dude who's running Tony G holdings, like operating this treasury strategy. I feel like it's just like you're putting someone from, because the only thing they have is that they have a publicly traded company. Like that's their only asset that they have, right? And that they're willing to you know work with this work with these foundations. So it's like,
Hmm.
what was the you could even draw a comparison to like what was the situation with Ohm. I remember we covered Ohm. Like they
Yeah.
had this token that was previously listed on Binance for a while, and like the project isn't really doing that much. Like it's a little shaky. Like the fundamentals are a little shaky. It's like, okay, but we can leverage this thing that's like, even though the fundamentals aren't there, like we can leverage our publicly listed status and like try to do something, like do some financial engineering, some stuff like that. So that's like maybe that's a little bit harsh, But
I
yeah,
think it's just they're just trying to capture the fact that, like, for all of us here, right, within 5-10 minutes, if we wanted to buy a token, we could go and buy a token, right? And you got to think for the general public or any of these money managers or people who aren't as obsessed and in the sphere like we are. In my view, I think a lot of these treasury companies are playing off that fact. A great example, we use MicroStrategy or strategy, right? Where I'm from in the UK, you can't buy any Bitcoin ETFs. And then
Hmm.
the average person, they don't want to go anywhere near exchanges or any of these things. It's too complex. So, for many people who might manage their own pension, one of the easiest ways for them to have a semblance of exposure to Bitcoin was through MicroStrategy. Same
okay,
thing with Metaplanet in Japan. When all the problems were kicking off with all the problem with their rising inflation, the debt, and their bonds spiking up to massive levels, Metaplanet was one of the most traded stocks because people were trading it through their pension. And then, some of these accounts or schemes that are offered, you're not as liable for tax with some of these accounts. In the UK, we have similar. We have ISAs. You have a certain amount where you're not so as liable to have to pay tax on it. So I think a lot of it is simply just the fact that most of these people don't want to come on chain and just buy it from the source. Think about it, right? You go to a supermarket, you buy a bottle of wine. Yeah. How many people go to the vineyard who made that grape and buy the bottle of wine from that vineyard? Not many people. Only maybe the people who love their wine or they're connoisseurs. They want to go tour around, see how the grapes are done and all that stuff. Whereas the average
See,
person, they buy a shitty bottle of wine from the shop. They don't care. They've got wine. I want wine. I think these treasury companies are very, very similar in a respect. Obviously, I might be butchering it. I'm just a smooth brained degen, but that's my 2 cents on it.
Mariano, you put this
Yeah,
overview together. What's your take?
basically, I think just to give a segue on Darren's point, I think he mentioned the left side of the buy side of these companies. There are, I think, other two main players here as well, which by listening to these companies' personnel, I have gotten the insights from. So it's not coming from any unbiased. I mean, they kind of biased, but they're very open into to the technicalities, and I think these are very new businesses. So the outcomes are could be the catastrophic, but I think they're very well protected from what I've heard of them. So just to give an insight there, I think what you mentioned is the retail, which is the, let's say, right curve. It's like or the left curve, right? The
left
left
curve, left
curve,
curve.
which is very, yeah, very you know closed to the markets. There are other ways to buy instead of buying these companies, right? But they're dumbed down, and they don't want to buy anything else. The other players on the middle is just like any other market. They're the market makers and arbitrageurs and quants, which are doing tons of volume, which are bringing these companies to, let's say in Japan, top one traded stock during a day, higher than all those massive companies that they have there. So I think that is a large market that these guys have created, which is a subsequent to the options markets as well. They have really built a derivative of these volatility heightened uh, assets. Basically, they're like an asset which is a derivative that's higher volatility than than the main, which is Bitcoin, given Ethereum, Solana, and Hype now. But
Mhm.
then the other player, the player would be the institutions, the fixed income, the debt, stressed debt funds, which are buying and getting the yields, which are in themselves a new category of yield, which a lot of are exploring. They're not the BTC yield, which Michael Saylor is
Right.
like putting into everyone's faces, which is that yield is basically a per share increase on the period yield, which he's of course sharing the ones that are the windows that make sense to share. the yields are more on the loans. So there's got to be a counterparty to every single raise that these companies are doing, and these counterparties are not left stranded. They have very tight conditions to where they operate, and they're getting juicy returns on these loans, upwards to 20%, depending on what the denominated asset is. So I think there's all these new participants which bring this product to being just not as simple as we think about. The premiums are just one facet of it, which make sense depending on the market size and the asset. Even Cantor this week released a paper covering now Solana treasury companies, and they're assigning a higher premium to these companies than Bitcoins. So they're putting even targets on them. They're buying, they're bidding, they're covering them, which is key for the market as well to understand that. So I think we're in a very introductory phase where new companies are coming to the market after strategy success, and nothing is given. I think there's a lot to discover. I'm not an expert on the topic as well, but I think that they're a tailwind for the crypto industry. They could even cause some crazy spikes because there's a prediction from, I think, one of these guys from these companies that every country is going to have, or every at least every big country is going to have some kind of treasury company. Here in Brazil as well, we got Merluz, which is one of the biggest, I think, Bitcoin treasury companies now as well. So mine is for the books as well right now. We've got a bunch of others to come.
Yeah, I mean, you mentioned like it's definitely like, I would say like the retail is not, like the retail audience is not like the good target, like strategy, like who is actually buying strategy. It's not even people. It's like, it's fixed income funds. Like they're not allowed to buy Bitcoin. Like they want some kind of exposure to it. So they're the ones actually funding this stuff, buying those convertible bonds. So like there's more barriers for these various types of funds than regular. Like it's much easier for some random individual to just buy Bitcoin, in his free time. Like there's no barriers for him, right? As long as there's like an exchange operating in his jurisdiction. So I mean, I think there's only a few countries that like are really relevant for the treasury stuff. So you have US, you have Japan, you have Brazil too. I mean, like there's most countries in the world just like nominally are not relevant. Like they just don't have enough um like nominal GDP. There's only a handful of these countries that are actually big enough like to make a difference. So I think once you start venturing like outside of US, Japan, like Germany, Russia, it's like, okay, there's like a point of diminishing returns, right? Um, so I mean, just the reality is like 95% of those countries, it doesn't matter if they have one. I mean, it's good for the dudes at the company, I guess. But I don't know that it's like
That's a good
a
point though.
tailwind.
That's a good point though, because the data point that justifies that, looking at, basically empirical data to justify the point I just made, which is kind of speculation, is that ETFs this year have all of these ETFs have basically, I think, internationally lost, other than the US one. So flows are going to the US.
Yeah.
Therefore,
Exactly.
we've had ETFs in Brazil before. Canada has
Canada,
had
Hong Kong,
ETFs as well. So that's an example.
Yeah, that is true. And like, I mean, people forget that. There were several jurisdictions that had ETFs prior to the US. Yeah, it was Brazil, Canada, I think Hong Kong were like the main ones. So, I mean, like you can already get a sense of like the demand for that kind of a product, right? So, I mean, there's like a few like interesting scenarios, I guess. Like Japan is one. They have like their tax situation. Like if they get that changed, like Hong Kong could potentially be interesting. Like if they're able to get more than mainland money, like that could be a huge unlock. But I definitely think like the majority of these countries, it's really only a few that you should pay attention to. if you're just looking for like a broader tailwind for like BTC or crypto as a whole.
Yeah.
Yeah.
Right. Definitely not like the last we'll hear about these treasury companies and sovereign
No.
funds adopting crypto as well. For now, let's switch gears a little bit. Let's talk about we touched on stable coins before very
Mm.
briefly. I don't remember who it was. Absolutely crazy news coming out on the stable coins front, I think. I'll share the
There's like
slide
5
from
things.
yeah, I'll share the slide from our market pulse again because it's a good overview. But yeah, basically Shopify is gonna partner with Coinbase and Stripe to do Shopify payments. JP Morgan is releasing a sort of institutional stablecoin, and JD, the Chinese retailer, is issuing their own stablecoin as well. And I haven't even covered Amazon and Walmart yet.
Yeah, Amazon and Walmart. Yeah, yeah. I
So
assume JD reacted to Amazon and Walmart, but yeah, I mean you can pull up the slide. Yeah, there's even more.
now we're
There's like
gonna
several
see
other things.
we're
But
gonna
yeah, I
see
think the Avalanche.
avalanche of these.
Oh,
I
okay,
mean,
okay.
corporates who
I thought you were talking about
gonna want
AVAX. It's
their
like,
own.
all right. Yeah, privy like too much news to even like I don't remember the last time there was like a sector like this where you had like yeah I mean probably never where you have a sector of crypto that has this kind of like adoption and this level of news. Like this slide doesn't even include the JD thing, which I think was
Yep.
maybe like a day or so later. Which actually that JD.com stable like it's not even just US dollar, like they're actually going to have like a Hong Kong one as well, which is a whole separate story of like, yeah, it's not even just like USD. So, because at this point, like stable coins are very synonymous with USD, like USDC, USDT
Mhm.
mostly. But yeah, I mean, it can definitely extend beyond that. You had JP Morgan. It's not even a stable coin. It's a tokenized deposit. So JP Morgan's actually like, they've been bearish on stable coins for a while. Like, not even just a typical like Jamie Dimon, like he doesn't like Bitcoin or whatever, but they actually have published like very in-depth like technical research with their own opinionated takes on like blockchain and stable. So they don't like stable coins because it's not. Yeah, we actually discussed this in the last one with Silhouette, because it's like it's not like a legal. Yeah, like if someone just takes your 20 million of stable coins, like you can't really do anything. So
Mm.
they don't like it for that reason. They don't like that it's public. They don't like, so they have their own private chain. Yeah, JPMD. Yeah, a bank deposit token. So that's the term they like to use, deposit token, because it's like natively issued, like that the stable coin itself or whatever you want to call it, the token on the chain is like it's actually um it's yeah, it has like the same legal rights, right? Let's say in the US you walk in a bank or you walk in a credit union, right? It has that little warning. It's like, okay, federally insured, FDIC up to like 150K, 200K, whatever. So
Mhm.
like stablecoins are obviously like they're not it doesn't apply to them. So I guess
Uh-uh.
that was JP Morgan's biggest gripe. That's why they like these deposit tokens. I mean, it's interesting that they even chose to work with Base in the first place. They already have their own chain for their institutional stuff. um, what's it called? Connexus.
Connexus.
Yeah, Connexus. So yeah, this is like, I guess you could say this is like the like contrarian take to like something like Circle. Is that, yeah, like why wouldn't JP Morgan just like make their own? And then this is like a completely separate argument, is that it's not even just that JP Morgan wants to like control their own coin. It's just that they genuinely do not like stable coins. Like they don't like the way they operate in their current form. It's too risky. So yeah, I mean, like I know B of A was like also mulling a stable coin, like pending regulation and stuff. So yeah, I think you might have like different approaches from these large institutions. It might not be as simple as just USDC on Base or on Solana. It might be like their own custom thing, deposit token, whatever you want to call it. But yeah, definitely like some nuances. But yeah, there's so much news like Shopify. I mean, at this point, like it's starting to get a
Yeah.
little overrated. Like it's actually too much. That's crazy to say. I mean, the Circle stock reflects it. Like it's kind of crazy. Yeah, it's like Trading at
Yeah, you think
the
that's like
IPO
a
is $31.
proxy?
What was that? Yeah, exactly. As a proxy for stablecoins in general.
Yeah.
But actually, Circle is like you look at these headlines. It is Circle, right? It's not with Tether, right? Like Walmart, Amazon, like Circle is, or the Shopify one specifically, right? Like they are using USDC. They're not using USDT. So most of these big announcements are going to be like it is directly beneficial for Circle and not Tether because Tether is focused on stuff outside of the US. Um, that's kind of like their whole thing, right? So, but yeah, I mean, at this point, it's getting like very, I don't know, like the stablecoin
Crowded.
thesis is like or from a sentiment POV, it's like getting overrated. Like Treasury Secretary Scott Bessent, like at first he said he wouldn't be surprised if there was 2 trillion in demand for stablecoins. Now he said 3.7. It was like a few. It's like I don't even know where these numbers are coming from. Like
What's a few
where is he
trillion
even getting
amongst
this?
friends? Come on.
Yeah, like I have no clue. Like what briefs they're handing him for this stuff.
It's a
But
bit
yeah, it is
similar
crazy.
to the NFTs. You remember in the last cycle there was like Budweiser, Coca, like a few,
I do remember
maybe it was
that. Yeah,
Pepsi, you know,
like
they all started
metaverse.
posting NFT things all at once. And obviously, you know, I'm not saying that fast food chains talking about NFTs is exactly the same as like
This
Right.
time is different. This time
giant.
is
But
different.
Yeah,
but
This
there's
time
like
is
some
different.
similarity though, because yeah, like Amazon,
course.
Walmart, like are they like JP Morgan is actually like they're in the trenches, like they're actually like developing their own stuff. Like they've been doing this for years, right? So like that's no joke. But like Amazon, Walmart, like one guy said like
Yeah.
Walmart's the most, they have the highest revenue of any company in the world. Like they say they're messing around with stable coins, even if it's like a joke. Like Amazon has to, like you got to do it. You know what I mean? You can't like say you're not going to do stable coins. Like your main competitor just said it. So and of course you have JD.com, like the Chinese Amazon or whatever, also coming in. Does it mean like they're actively like onboarding engineers and like figuring out this? Like I don't know. I mean the easiest path, like I think JD.com gave more light on what they're actually going to use stablecoins for. It's not for people, like it's for their paying vendors like around the world. Like they have their international vendors, right? So it's not actually
Sure.
like the people in China are never
That's
going to
huge.
pay with stablecoins. Like that's out of the question. But yeah,
Right.
you
It's
get something
more
like
about
Amazon,
the infrastructure.
yeah, like B2B, yeah, like Visa, something like Visa. Yeah, people around the world, like all these different card issuers using the Visa name. Like, how does that money get to Visa? Like it's very complicated, right? You have all these countries, different currencies, like you have FX risk, so you can use the stable coin and help out there. But yeah, I really think that's like the only use case, like cross border, it's like certain cross border payments, and then domestic, specifically domestic U.S. payments, only U.S. Like the rest of the world, yeah, like China, India, Southeast Asia, like that's half of the world. They already have much better payments infrastructure. Like they'll never use stablecoins, but U.S. doesn't have it yet. But they were building it, right? Fed now, the Federal
You're
Reserve
talking
was like
about
building out,
consumer payments.
yeah, consumer payments. So
Right.
because I've seen like pretty like smart people talk about like stablecoins as payments like around the world. So I just think that's not really like a
Well,
large
you touch on
market.
an interesting point here. I think there's a very, it all gets heaped into payments, but there's a very
Yeah,
vital difference in talking about
yeah.
like
So I think like in
consumer
reality,
payments or like
yeah,
the way that big corporates like Amazon, Walmart, etc. handle their payments, like B2B payments. That's
You
very
guys,
different, I think, or with merchants.
yeah. Go ahead.
Go ahead,
you know what
Mario.
I'm bullish on? I'm super bullish on these new big massive M&As like Stripe on these
Right.
two mergers recently. But recently a survey came out of Coinbase which stated that 60% of Fortune 500 companies are working in blockchain, so massively on payments and stablecoins.
All right. I saw that.
Therefore, I'm most I think they're the big ones are of course like super bullish, but I think the repercussion on the uh, lower size companies are going to make a larger impact because more customers are going to be tapped. Okay, of course there's a overlap of customers where the big companies have massive market share, but there are subsectors like micropayments, you can name them, that these two companies are going to tap into more tail end customers, which I think are going to be net positive plus EV for what I really want is decentralized stablecoins growth. And that is a sector which currently only has 7% of total. So there's about $250 billion of stablecoins in the total crypto market cap right now.
Yeah, I think it
which
just crossed.
is-
Yeah, 250.
Yeah, and of that, there's about 20 billion, which is equal to around 7% of decentralized stablecoins, which have not been on a massive uptrend. This is covered in our to be published Athena valuation thesis, which is going to make a case for how Athena could make an impact on that portion, which is the big right now the biggest growth trend stablecoin in the market. It's about to hit all-time highs at 6 billion. But give or take, I think that massive companies are, and I think we need to touch on the Genius bill here, which passed yesterday. Daniel could
Right.
speak further on it as he's American, but Americans have been deleted from the financial markets since I think 2012, where a lot of the fintech companies and a lot of the massive operations, I think what it was called choke point operations, and that turned off a lot of entrepreneurs from the US, shifted talent offshore, et cetera, et cetera. Now that we have a pro crypto government led by the Republicans and Trump, and Trump himself has a lot of credit too, because he's got a company in crypto. His son is doing a lot of stuff as well. So it's not just like, oh, I support crypto. He's actually building on. So therefore, I think passing the Genius bill, which I think is going to now the House then President sign, should take around the minimum to go live should be around 3 months. The minimum, the minimum. So that the effective date is still yet to be exactly done, but passing the Senate was the biggest hurdle, and that's for the institutions has been the longest fight, and I'm bullish on that as well.
Right. Yeah, you had the Genius Act, and then earlier you had the Stable Act. So I guess a little confusing when
Any
remembering
takes on
the
the Genius bill
nuances.
passing?
Oh, I didn't even know he posted something on this. Okay.
Yeah,
Well, I mean that's good. Like
yesterday.
normally Trump doesn't care that much about like crypto stuff. You know what I mean? Like he just shows up at the event, like shakes a few hands, and okay, that's good. I believe, if I'm not mistaken, I could be mistaken this with the Stable Act, but I think the Genius Act is like it's the one where you're not supposed to have yield-bearing stablecoins actually. But there's like some potential loopholes, some workarounds, like distributing it through exchanges. Like if Athena wanted to pass on the yield to Coinbase or something, then Coinbase could technically, even though it's like, it's the same thing, right? Like you're giving the yield to a user. It's like, oh, Coinbase is giving it, not Athena, so it's okay. So there definitely like some nuances and stuff associated with the Genius Act, understanding that it is really like, yeah, I mean, it is applicable. It's like, this is for Americans. I mean, stablecoins is $250 million, or quarter of a trillion. So it's grown to like a very massive market already
Yeah, I
without
think
anything
the
from the
major
US.
unlock for
No, go ahead.
cut you off, but the major unlock I think that the Genius Act has, which I think you passed on kind of overviewing, so I just wanted to drill a little bit more, was that it is not KYCing the users outside of the big issuers. So they do have mandate KYC and AML centers for issuers to close the key regulatory gaps, but they do not for the users themselves. So Daniel could be non-American and be using USDC, which is regulated in the US. So that's a major unlock where crypto has had a great line before, and this is a bipartisan act as well. So that's like for me one of the most key important things that this has established in the US, which is like, okay, decentralized. A lot of DeFi, a lot of it wasn't a major uncertainty, and then that's kind of clarifying things, and the shadows are going away.
That is good. Yeah, that is like, you definitely want to breathe, especially for like Athena or something. Maybe you're breathing a sigh of relief after that. I mean, it really is like the no-brainer approach to it. Like you don't, yeah, it's much easier to vet like this handful of issuers than like every single person using um, the token, which is obviously like, unfeasible. So yeah, it's definitely good. Hopefully, you can see more like integrations with like apps in fintechs using stablecoins. Stripe is obviously extremely active, although not in the U.S. They're using stablecoins to basically like it's like a quasi legal way to go into other markets, right? Like they launched their financial accounts. We've covered this previously. It's like you use a stable coin, just same old thing that Stripe lets you do, but you use stable coins. This is for 101 countries that are currently not supported by Stripe, right? Stripe like officially supports like 49 countries or something. So the stable coins is like a way for them. It's like, oh, we're not allowed to be in these markets. Like we'll just use this thing that they've never heard of, and so, so it's legal for now. And especially when you have the U.S. like passing positive regulation, yeah, maybe these countries actually like there's like okay, cool, and there's never any issues for these 101 countries. The other thing they were doing was they partnered with 4 card issuers, or no, it was 3, I think. With it's part of the bridge acquisition, right? Like having stable coin backed cards, right? There's a handful of them in crypto already, but yeah, Stripe is now partnering with these issuers themselves, with Visa and all these guys. So, but that too, it's deployed in 6 Latin American countries, so it's not in the U.S. So, yeah, I definitely think there's like it seems like they have a very heavy focus in the Latin America market right now, and then they're using they're partnering with like the U.S. distributors like like a Shopify to get into the domestic U.S. market. So yeah, I think that's what I most see the use. Like I don't think it works. Like it definitely doesn't work in Asia. Like I don't think you'll see a Stripe announcement of like cards rolling out in Asia for stable coins. It just wouldn't work. But for U.S. domestic payments, which is a big market, like if you compare U.S. E-commerce, like U.S. digital payments, it's only like 14%, right? China's 50% of all the money that moves in the economy. In China's 50% is online. In U.S. it's a fraction of that. So you can have something like stable coins, and it can kind of accelerate that growth. Yeah, as I mentioned earlier, like U.S. does not have like a very strong like domestic payments app. They were building one out and they stopped because they didn't like. I mean, Jerome Powell apparently like he thought it would be too destructive to the banking infrastructure. Basically, he was like, this is going to alienate and like Goldman, like J.P. Morgan and these guys. Like, let's stop building this. So stablecoins can be like a de facto, like WeChat, Alipay, UPI for US. So yeah, instead of having the government themselves do it, you have like several private players kind of like doing it together in a way that the U.S. government tolerates, presumably because it's net new demand for dollars, right? For these treasuries.
I think it's very bearish for emerging market currencies as well, because like
I don't know.
you think so, yeah, but
I
think
think I'll
about it,
disagree.
right? So many countries around the world, many people hold dollars, physical dollars. Now you take places like Nigeria, maybe Iran, some of these other countries that have had problems with their home currency for years. And a great example is most people buy their home currency at a black market rate because no one can buy
Right.
that currency through the bank because only the employees are able to get the currency at a decent rate. So now you add the proliferation of stable coins into it, with more and more people having access to smartphones. I would argue that it takes away the need for anyone to really own physical dollars anymore, because it's so easy for them to have some sort of derivative of a US dollar based stablecoin on a smartphone. And at that point, all those middlemen in all these countries who make an absolute killing selling these dollars to people at this crazy black market rate, which I don't know how anyone ever decides. Is it the voodoo? Is it from the stars? Or if the moon's half or the moon's full? And I think for a lot of people in these countries, they get better access. But, I'm open to hearing the other side of it.
Yeah, I mean, I've seen other people have that take as well. and I think it's just not reality. Most like it's 2025, right? Like this is not like the Asian financial crisis or something where you have like economies like imploding and they're yeah. I mean, just look at like who is actually buying like U.S. assets the past 20 years. Like it's just Asian country, like Japan, China. Like just look at their currency relative to USD. Like, is it going down that much? Like not really. You look at like India, something like that. It's like okay, you're losing a couple percent every like a few percent every 5 years. Like big deal. Like are you gonna? And then these people actually like gold. Like so especially in emerging markets, like they'd rather just hold gold. Like they already do this actually. So if they were gonna hold like some kind of store value asset to with the intent of like escaping their own country's debasement and inflation, which is actually less than U.S. inflation. U.S. has a lot more inflation than many countries actually. Like there's no inflation right now, like in China. Um, then yeah, they'll probably just do gold. Their mom does it. So and yeah, now you can have like fintechs and stuff that allow you to hold gold easier.
My
So
point's not inflation though. My point is countries like in South American countries, African countries, where people might have physical dollars, right? What I'm saying is it
physical
takes
dollar,
away
okay.
the need
Yeah,
for
yeah.
people to
I
have
mean,
physical dollars and then the knock-on effect it might have on these people who are the middlemen in those countries. I mean, look, I'm sure in tons of places in South America, maybe I'm wrong, people hold physical dollars. When I spent time myself in Cambodia, you pay dollars, mixture of currencies. And I'm saying with the proliferation of stables, with everyone paying on their phone nowadays, does it simply just extend further to the point where someone might think, well, why the hell would I want to hold the home currency when
yeah.
for years our
Yeah, so for
family have
that,
had dollars?
I think that'll never happen. Like physical dollar, yeah. So people shouldn't hold physical dollars anymore. But like I think this has no impact on emerging market currencies. Like yeah, like in Cambodia, like they have their native currency, they have U.S. dollar as well, and like it's interchangeable. Like people aren't like hoarding the dollar. You know what I mean? Like you have Gresham's law and stuff, but like yeah, I mean their currencies are fine enough. I mean most people just don't actually have, and like there's yeah that's what FX risk is, right? Like you have like people have bills to pay, right? Their bills are not denominated in dollars, so it's actually people's like 40-year-olds, 50-year-olds, in US and outside of US that like actually have to worry about this stuff, where they have like a large sum of money beyond what they need for the next several months of bills to pay, and they can begin to worry about like a store of value asset. So I just think like the amount of dollars that's in emerging market currencies where that risk is applicable is just not. Yeah, I don't think it's very high, and I just don't think they do it. Like people can access stablecoins already, right? Like I use this Chinese delivery app. You can use stablecoins on it. Like you can top up with USDT. No one does it, right? Because you can use WeChat, you can use Alipay, you can use the local bank. Like you're not losing. You know what I mean? Like it's only a few countries like Lebanon and these places that are bordering on the definition of hyperinflation, right? Like 50% inflation a month, but like that's not most of the world. So I mean, stablecoins are very accessible right now. I think yeah, like if people wanted to get out of emerging market currencies into stablecoins, they have, and they would have already. So yeah,
All
but I
right.
definitely think it can help, especially in like U.S. Yeah, like U.S. adjacent markets. But I don't think, yeah, because I definitely seen the take that it's going to like usher in like a new era of like U.S. dollar dominance. So I
Yeah,
definitely
yeah.
think that's not like a, and no one would stand to gain more than me from that. Like like Americans living outside of U.S. Like that would be great. But like I don't think it's the reality. Um,
Interesting.
yeah.
All right, definitely not the last on this discussion either. I think zooming out a little bit, we touched on a lot today. I think the stable coins, the treasuries, crypto valuations. Any major takeaways to wrap it up from anyone?
Um, no, I'm
I
just
I'll
have one.
bullish
I'll
stable
I
add a
have
coins.
one.
last. Yeah, I'll go first. I'll add the last point there on the previous conversation on stablecoins.
Mm-hmm.
Though I also live in a developing country, emerging economy, where third world country, whatever you want to call it. And I also think there's extreme value, but there's a limitation to it. Like a lot of people still use physical cash, like Darren said.
Yeah.
Not physical dollars, though. For example, my country isn't really denominated in dollars, but there's a lot of other vicinity countries which do, like Paraguay, Argentina, and others, which are going to, I think, be case studies. I'm not sure entirely where that's going, but I think there's growing demand. And where I want to see is how stablecoins play out on those. I think, as Daniel said, not really the killer use case as of right now. But what I wanted to stamp my bullish, take on is on the Genius Act again, which basically this thing passing says, okay, just for context, every asset in the world is competing with each other, and the U.S. has recognized that the treasury assets tend to have massive positive impact for the U.S. That's why the U.S. has had such an enormous dominance over the previous, call it, decades. Therefore, what it can do to position itself, it's being bullish on that trend. And what we have seen is we're very small compared to M2. Right now, stablecoins is just shy of 2% of total. It's actually not even halfway 2%. It's like 1.2% on its way to as a share of M2, which are of course on the trillions. Therefore, how does it not stay behind? It has stayed behind a lot of the crypto talent. So I think what the US has done here, to make my final point, is it has put its trust or reputation on the line with crypto, because these stable coins are minted in crypto, in blockchains, public blockchains right now, massively secured by somewhat decentralized validators, you could argue, but they're putting their entire countries, these billions of or future trillions of dollars in their name in front. So I think massive win there, and it's very early for them to do it. It's not, and so therefore it just puts everyone in the same page that, okay, these blockchains are safe. Basically, you can do anything on them. The U.S. is letting everyone hold dollars on them.
Impactful, yeah. I think that it is good to highlight like the level of impact. Like I didn't see that Trump truth social post, but yeah, that is like pretty significant. Yeah, it is a big deal to have the U.S. Treasury Secretary, like he's literally like, yeah, he can't even contain his bullishness. Like he's increasing his target for stablecoin demand by by like 70% each couple of weeks. Like, so I mean, it is a big deal. Yeah, I mean, I wouldn't be surprised if they had like, I mean, I don't really know how it looks in the future. If they have like a few like select chains that are vetted, you know what I mean, like Solana, ETH, like, okay, like these are the good chains. Like you can trust stables here, and then you have some others that are, I don't know how it looks, but yeah,
Government
it's something
backed.
for them to figure out.
Very interesting. Okay, I think for me, the takeaway from this episode is we often talk about like, oh, retail's coming, but I think actually the institutions are coming. Listening to this episode, uh, adoption is coming. That I'm pretty sure of. I would say it's already here. It's already a fact. Um, yeah, guys, thanks for providing all the insights. Audience, thank you for tuning in. Um, this was Market Cap, where we cover and explore, together with funds, founders, and analysts, the latest market developments and provide insights to you, our audience of institutional investors and traders, as well as industry professionals. If you like this, you can follow our Telegram channel for daily updates, the daily intel. The link is in our bio. And of course, you can join our next show. We're live every Thursday at 10 a.m. Eastern Time on X and YouTube as well. If you want a reminder, you can turn on notifications for Alea Research. And that's it. See you on the next Market Cap.
Thanks, everyone.
Thank you.
Peace.